Well, good morning, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. It's another Friday. It's the 4th of the month. My God, the December month is almost over. I mean, not almost over. The year is almost over. December just began. But if it continues at the pace we've seen the rest of the year, we might as well be celebrating New Year's Eve right now because, boy, oh boy, the year is going by very, very quickly. So let me talk about global economy. Let me talk about market sentiment real quick. We're going to have a jobless report in about 2 minutes, so we're going to get it to see it live in a few actually in about a minute or so. And I want to talk about foreign assets. So we've got a lot to talk about today. This is going to be a very important session. Please pay attention and write down these ticker symbols. So looking at the futures, and this is like a minute before the jobless reports. Yesterday, what we've been seeing recently has been either the NASDAQ strong or every other index strong. NASDAQ strong or every other index strong. And that's the fear greed between rising market versus COVID-19 vaccine coming out. Rising market or death rate increasing versus COVID vaccine upside. So it's been kind of going between the two. And today's actually one of the first days that we've seen an overall bullish sentiment across the board. As you can see here, the NASDAQ's up 30 points, S&P's up 11 points. It's fairly broad. The NASDAQ is outperforming everything by a little bit, but the bottom line is everything is up. There's nothing really COVID fear or greed based on today's sentiment. In other words, COVID is not driving this market today. Now, looking at the global market, global stock market futures rose Friday, as I just talked to you about, ahead of the latest jobless claims report, and major oil producers agreed to increase production gradually. So we may be seeing some upside from the energy market. Investors are looking ahead to the monthly job report, which we will see in a minute or so, which analysts think will show a slight slowdown in the pace of hiring in November from the previous month's 638,000. And I think it's going to be right in that ballpark. But the number is not that great. We started cooling off, right? I mean, heating up. Employment started heating up right after COVID-19, March, April, May of this year. But it almost seems like last year. But then the numbers just stopped going down. So it just seems like we've been having a very high unemployment claim every week. Market sentiment has also been improved this week by data showing fewer Americans than expected applied for jobless benefits. That's the number we got yesterday, but I'm going to tell you again, we're still in the 700,000 range. Okay, so we're below 750,000 new claims every week. We're now at like 715,000 claims. The number went from over 1 million to 700,000, but it's been staying there. So it's been very, very slow to drop below that level. Yesterday was actually one of the first times that it went below 750. So I'm hoping the number I'm going to see in a minute or so will be positive as well. Let's see if indices are moving. Not yet, so the number's not out yet. Investors hope one or more COVID vaccines might be available next year despite the challenge of distributing billions of doses that must be kept frozen. Folks, logistics. We're now finding out that some people can't take it because it's a live virus. And if they have a very big susceptibility to their system, it can cause death. My father-in-law could be one of those people. So there's a lot of issues, and I'll talk about this in later on, but I'm going to tell you, folks, there's a lot of unforeseeability that we're not pricing into this vaccine. How many people are going to take it? Will it work for everybody? What are the side effects? How expensive is it going to be? Is the rest of the world going to... We haven't started asking the right questions yet. So far we've been COVID vaccine, no COVID vaccine, but little by little we're going to start asking the right questions, and we may find out what the doctors have been saying, that this is a bigger problem that we're seeing right now. Also Thursday, U.S. health authorities reported a one-day record of 3,157 virus deaths. That's not pretty. Now, while I'm here, let's see if the jobless claims report came out, or the unemployment data, excuse me. Let's see. I can't wait. I wanted to see this all week. Let's see here. Let's see what the percentage is. Let's see if it's out. It may not be out yet. I'm doing the... Oh, yeah, here we go. Ooh, look at this. Interesting. So unemployment rate is 6.7%. Recovery 200. Yeah, I don't know about this number. It's not bad number, but look at unemployment. Unemployment is still 6.7%. It's not even below the consensus range. So non-farm payroll 245,000. But look at the unemployment number, 6.7%. You see, it's very hard to get us from this 7-8%. That's the number of percentage of people in America unemployed right now, 6.7%. And as you can see here, prior 6.9, consensus 6.8, and we're at 6.7, and the range 6.5 to 7, and we're right in the middle. So again, the numbers are not all that great, not great at all. And let's see if the indices are moving. They pretty much expected that into their price. So again, nothing major, but as you can see here, unemployment rate 6.7%. That's the number that I like to look at. I like to look at the percentage rate, not the non-farm payroll, but the unemployment rate. So again, 6.8%, 6.7%. These are not great numbers. So things are not going as well as we've expected. Investors have been encouraged by signs that Democrats and Republicans in Washington may get past their bitter partisanship to agree on the economic package. And oil prices edged higher a little bit after OPEC and allied countries, including Russia. Putin is back. Agreed Thursday to increase oil productivity only gradually, starting with 500,000 barrels per day in January. And oil prices actually going up. It's now above the price that U.S. frackers pay for the energy market. Now, I wanted to show you something that I'm not liking. This is, again, the put-to-call ratio, and it backed off away, and now, again, it's at nosebleed levels. Not only is it at nosebleed levels here, as you can see here, this means the market is overly bullish, way, way, way overly bullish. Now, and if you look at the SPY, I'm just giving you heads up, folks. I'm telling you, this is a red flag here. And if you look at the SPY, you will see, notice higher highs, lower highs on the momentum. That's not positive. That's divergence. So not only are we overbought, but we're also diverging, and put-to-call ratio is really, really, really bullish. I mean, bullish. Let's go longer term. Let's go 11 months. Yeah, as you can see here, we're getting into that stretch mark. Everybody's buying calls. Everybody thinks the market's going to the moon. It's not, folks. And if you, and again, I hate to say this, and I hate to bring this up every time, but now we have divergence. We've got the put-to-call ratio. We've got overbought territory. And if you look at the NASDAQ 100, 88% of stocks are trading above. That's 88 stocks out of 100. And again, I just wanted to show you this. This is eye-opening. Look at 5-year momentum levels. And it looks like we're about to turn south. This is the highest momentum levels we've seen in 5 years. And if you look at 10 years, you will see we're right up there. Look at that. Highest level since gosh, what is this? 2011, March 2011. So I'm going to tell you, folks, we are grossly overbought. And it's not just the NASDAQ either. Not even close. It's the S&P too. Divergence, RSI overbought. Look at this, 91% of stocks out of 500 trading above the 200-day moving average. Look at that. Not since 2011. So, folks, we are grossly overbought. I highly, highly recommend you start shifting and taking profits out of stocks and moving profits into ETFs. Take 50% profit, lock it in, and put the rest into an ETF. Then when the market starts going down further, take all your profits out of the ETF or your gains out or your loss or whatnot. Take your money out of the ETFs and put it into cash. That's how I usually do it after a bull run. That way you don't miss a majority of the move. You take your profits from stocks, you put 50% in the pillow, under the pillow, and you put 50% in an ETF. And speaking of ETFs, let me give you the top 5. This is XGX China Consumer ETF, ticker symbol CHIQ. As you could see here, it is in a very, very, very strong trend, and I believe it's going to be trending for quite some time. It's right now right at the 50-day moving average. It's a good time to start looking at another buy opportunity on this. Either way, this is a solid ETF. Next one, social media ETF. Let's take a look at it. SOCL ticker symbol. First one was CHIQ. This is SOCL. Let me look at this thing. Provides investment results generally priced in from the selective social media. Let me show you the constituents it has in it. Look at that. Facebook, Snap, Twitter, Match, Pinterest, Alphabet, Baidu. All the stay-at-home stocks, folks. SOCL. Almost like South Cal, right? SOCL. Anyhow, next one, pause. ProShares Pet Care ETF. PAWZ. I've talked about this before. I like this ETF. I like how it's smoothly moving and it's not increasing in volatility. Next one, ARKF. We've talked about this. This is the innovation ETF. I mean, look at this thing. It's beautiful. And last but not least, this is the emerging markets. Now, this is emerging market, internet, and e-commerce. Ticker symbol EMQQ. Take a look at this one. I wanted to give you my five favorite ETFs right now. Look at that. Love it right now. Ticker symbol EMQQ. ETFs tend to decline and increase slower than stocks, but they have better relative performance in holding because there's broad. I mean, you could see here all the stock this holds. You've got JD, Pinduoduo, Naspers, Mercalibre. It's got all the good stuff. All the stocks have been going up. So I like these five. Again, CHIQ, SOCL, PAWZ, ARKF, and EMQQ. And by the way, speaking of emerging markets right now, folks, for the first time, have overtaken the Russell 2000 as the strongest index. So this is the Russell 2000, right? And this is emerging markets, ticker symbol EEM. This is where money is flowing right now. Money is not flowing into America. It's flowing out of it's flowing into smaller stocks. It's flowing back into stay-at-home stocks, and it's flowing into emerging markets, which means money is coming out of US and going back into international, which is something that happens when Democrats take office because they're better for the globe, where Republicans are more focused on America. And I hope I gave you a thorough Friday report. Now, folks, I've got something even bigger for you. The stock market can be unpredictable, especially given today's economic and political climate. That's why you need a trading system and a strategy that'll net you consistent returns year after year, no matter what life throws your way. I mean, look at what life has thrown our way this year alone. It's been crazy. And that's where Trophy Trades can help. The stress-free trading methodology, it'll allow you to capture more of a stock's gain without leaving large profits on the table. Man, I hate leaving large profits on the table. It works in even the most turbulent markets. You've got to check this out for yourself. Triple, quadruple digit gains, all the good stuff. Click on the link below. Check it out for yourself. You don't want to miss this. Have the great weekend and share some feedback with me. Post some comments. Love letters, hate letters. You love my shirt, you hate my shirt. You like me, you don't like me. Feedback, comments, positive criticism, negative criticism. I'll take it all. Have a great weekend. Bye, everyone.